Hello, this is Bob Joyner, and in this video analysis of the SPY for Wednesday, July the 10th, 2024, we're going to take a look at what the market did, how it bounced out, it bounced up, and how it had a big market rally. And I'm going to challenge you a little bit about the best way to play this, what happened today in the market. So let's go over and look at the charts and see what we can see. First off, the green line here, and in case you haven't been watching this series, you're looking at a 4-panel chart, 26-minute in the far left, 1 minute, then a 5-minute, and then a 1-minute chart. Okay, various things on each chart, and in different videos I emphasize different aspects, which I will do again this evening. But I want to draw your attention to the green line. First off, the green line, as you recall from yesterday, was yesterday's high. And you can see how that's reflected over here on the far left column, and you can see what the market did after it found support at yesterday's high and just kept going, which of course continues our bull trend. And we've been talking about how we've had a series of higher lows and higher highs in the market in the SPY, and that continues obviously with today's big rally. But big move up from that 557.20 all the way up to about 4 points above that. A little bit past that is the high for today. So big move in the SPY today. So what happened though? Around 11 o'clock, okay, I want to bring your attention over here. I'm going to use a blue line. If you've been watching previous videos, you know that this blue line is my 5-minute half line, what I call 5-minute half line, which is the opening of that highest high bull candle right here, that green candle on the 5-minute chart. That's the opening of that candle. So when we have price coming back down and different things qualifying, then we have red candles. And if you just draw that line, drop it down each time you have a new lower low, a lower high and a lower low, and then you'll be dropping it down to here, then to there, and then it just kept falling down. It was not a quick drop. These are 5-minute candles, so it took a while. It took about an hour as they come down here to these lows. But we finally came down to R1, and we had previous support in that area, as you can see, around 9:45 this morning, soon after the open, and the market rejected that. So what I want to point out is this little box right here, which I drew for members right before we hit it. And that was this box right in here. I'm going to widen out this 5-minute chart so you can see it a little bit better. But right around here, which was 9:40 actually this morning, we had this pin bar action, pushed down, rejected that lower low, and went back up, and that was the beginning of that rally. And then again at 11, when I drew the box right before we got to that point. And the reason I drew the box is I knew that that was my target for the short that I had in place, trading futures and looking for a place to take a profit. And I knew that pin bar action right in there, since the market had rejected that area before, I knew that that was a high probability time to be taking profit, and it worked out really well. But the main thing is, drew the box, and we had the pin bar action again, and a quick push back up just like we did before. And that 5-minute half line now, which is that blue line, you can see we start to move back above that, just like we moved above it earlier, just like we moved below the 5-minute half line before, and that 10 to 11 moved down. Then at 11 we move back up again, right? So just wanted to point that out, that pin bar action. I put a little bit in the description box in this video about pin bars in case you want to read more about it. But you're probably already familiar with pin bars and the importance of it. And you can look up at the high up here as far as pin bars as well on that one. And it just kind of gives you, three pin bar action up here. You can kind of see how the market's rejecting that. So always good to be watching out for pin bar action and how it may be antecedent to changing in the market sentiment. Push down, and again the big bearish push down, the quick rejection of that means it ends up being just a very thin candle on these Heiken-Ashi candles especially, and then we start to move back up. As I said, we move back above the 5-minute half line. Now what I want you to do is I want you to expand out the 5-minute chart again And in case you were not trading today and you had the day off, I wanted to show you what happened after that. So I'm going to expand out the charts. And again, if we just do that same action before, where we take the 5-minute half line, which is blue line, and half is HAF, stands for Heiken-Ashi fractal, as covered in a previous video. But I'm just taking that 5-minute half line, going up to new. We have a new higher high, higher low, higher high, higher low, pause, higher high, higher low. And if you notice, that blue line is not, we don't cross back through it, right? So it just stays good. And we just keep, every time we have a new higher high or low, we're moving it up, moving it up, moving it up, right? And sometimes you have long periods of consolidation after a big candle, let's say, especially after we ran up to the R3 line here around 12:20 or 12:15. Then we had a little bit of a squeeze, a little bit of an uncertainty, but the market just kept it up, and we just kept on going. So that blue line here just keeps getting moved higher and higher and higher. And then we finally have a test in here, a few red candles. But again, if you look at that 5-minute half line, price does not get down much at all, especially at this point when we're at the R3. That's a big move, folks, if you're not used to that, if you're not used to using the pivot lines like that. But then we moved up, went a little bit higher. We keep pushing these lines up because it hasn't been violated yet. We come back and retest it again around 215. And we just keep going up, folks, But if you can just, on a big move like that, if you can see that 5-minute half line, it can give you the confidence to stay in the trade. That's one thing you can use. If you're using my charts and trading off my charts, which some of you are, then you can also see this 5-minute CC copy curve down here at my settings. And you can see from this rally back up all the way through the afternoon, that CC copy curve is just staying green that whole time, right? So that's another thing you look at. Another thing to look at, I've already mentioned in a previous video, is Chiku span. Chiku span is this orange line, and it's staying above the historical price curve. We have a few times where that 5-minute half line is tested, where it's a little bit iffy, but it primarily just stays above that the whole time. Also, I've mentioned the 27 EMA and VWAP. VWAP is this orange line down into here, dashed line, and we're just staying obviously above that this entire big rally. The thing I want to ask you about, the thing I want to pose to you is, how do you play that? How do you play that big bull market? Now, usually most people are not used to that kind of rally. Most people are going to get extremely nervous holding a trade for that long, from 11 until 4. How many people actually stayed in that one trade that whole time? Okay, probably not too many. You may not have the availability to trade that long, for one thing, but the other thing is it just requires an immense patience, an immense amount of actually just not paying as close attention, just moving your lines like I did before and just letting price do it. If it's that bullish and everything is just staying green, what's the rush to exit the trade? I mean, I tend to be a scalper on futures, but when it's that big of a run up, what is the best way to play it? So the challenge I want to tell you is, during that whole period over in here, I'm going to come back over, and you can see on the 26-minute chart, before I get off of that, the 26-minute chart also has this Chiku span, this orange line above it. So on the 26-minute chart, Chiku is above historical price curve, and on the 5-minute, Chiku is above the historical price curve. That double matchup there, without hardly any retracement at all, is just a huge move in the market. I think I've said that already. All right, so what is the best way to play that? Now, most people, if you stayed in that trade for 5 hours, you kicked butt, you did really well, you made a lot of money. As long as you were long and you weren't short, you made a lot of money, okay? But other ways to play that, and sometimes you just have to sit back and look at the chart and say, what would have been the best way to play this trade? How could I have made the most money? And the fact is that the professional traders, the people who are really making money in the market, are not just getting in and sitting there for 5 hours. Okay, they're not. What they're doing is they're adding to that position all along the way. Okay, so instead of scalping it with each little push back up, They're patiently allowing price to move, allowing that strong momentum just to continue and to carry their trades forward. But beyond that, they're also looking for opportunities to add to that position and make it just a mammoth position. Okay, so after we get this big run up, if you follow the cursor here, I'm going to stretch out this 1 minute chart so you can see it here, okay? But you can see I've got all kinds of stuff on this 1 minute chart that we're not going to deal with right now. But overall, what you've got periods of expansion, of course, like you always do. Contractions. The contractions in this case don't last very long at all. You can see I've got volatility stop dots on here. Those volatility stops are tested, like in here and back in here, but not much really. And you can see also this is what I call the J Kumo, which is a Ichimoku Kumo setting that I've my personal settings for that one, so I call it J Kumo. But you can see how price is staying above the volatility stop dots. Price is staying above the J Kumo. CCB down here in the very bottom is also staying green, just like CC on the 5 minute is staying green. And we just keep moving up, right? But the opportunities are to add to the position and just to build a mammoth position. So when you have this little dip in volatility, which occurred over in here, let's say, okay, then you have an opportunity to add to that position, okay. It happened before over here when you have this volatility dip, you could add to that position. Volatility, a little dip again in here. And again, these dips are happening within the context of these 5 minute half line support lines that I've been talking about. So if you're trading right in here, the 5 minute half line is here. Let's tighten it up so you can see it. 5 minute half line is here, okay? So this little pullback right in here in no way even comes close to violating that 5 minute half line, and you have another opportunity to add to the trade, okay? And we just keep moving forward here. There's no reason to get out of the long, but there are reasons to add to the long, okay? And you can see there's just every little pullback there is an opportunity to add to the trade. Look at CCB, still staying bullish this whole way through. We just had these little pullbacks, boom, boom. So imagine, if you would, I'll just stop there because it's becoming redundant. I think you get the idea. But the idea is this: if you had played it that way, if you had just been adding to that position this whole way through, then that means not only would you have qualified as a long, and not only would you be long way back from down in here, but you would have added successively positions all along the way, so that not only is that position profitable, but all these little other later trades are also extremely profitable, and you have built a massive position as the market just continues up, and you end up with a massive gain for the day. Okay, so I just want to have you think about that, and when you look at a chart and when you review your trades for the day, ask the question, what is the best way to play this? How could I have made the most money on this chart today? And then look specifics, look at opportunities for doing that. And of course, it's going to make you a little bit nervous when you first start doing it, because most people, they're used to adding to losing trades. They're not used to adding to winning trades. But I just want to challenge you to think that way, because if you can learn to trade that way like the professionals do, then you're going to make a lot more money, and that average position is going to be huge compared to your average loss. And these are the kind of trades that make up for all those bad days, all those days where you had your head, deer in the headlights kind of movement, where you just didn't see anything right at all. When you have a big move like this and you can capture it and you make a boatload of money on this one day, but by adding to that position to build a mammoth position, then that just makes up and it covers an awful lot of error. Okay, so I want you to think about it like that. All right, hope this video has been helpful. Appreciate your liking the video, appreciate your comments. I've already had a lot of very positive comments, and I appreciate that. It makes the effort for doing these videos a little bit easier. So continue to like, continue to comment, and I'll talk to you tomorrow. Thanks.